Good afternoon, good morning, everyone. I'm very happy to welcome you to another FinGeo virtual seminar. Today, as you all know, because you've registered, we have Ivana Socoloff with her lecture, Experiments of Real Estate Financialization, Large Developers and Real Estate Funding Under Financial Subordination. I'm very happy to have Ivana as a speaker. She has already spent some time in my research group in Leuven, so I know her research quite well, and we're in regular contact. We tried to get her for the FinGeo series earlier on, but we were waiting till she said that she has the best new work to present, which she now has. So we'll hear everything about that in a moment. Ivana is a sociologist with a master's in territories and space and a doctorate from the University of Buenos Aires. She's currently a researcher at Argentina's National Research Council, CONICET, and based at the Institute of Latin American Studies at the University of Buenos Aires. She specializes in urban sociology and economic geography and has published articles on real estate financialization, among other topics. Ivana, the floor is yours. You can start sharing, and then I'll ask everyone to turn off their microphone, which I think everyone already has, so that's great. Yes, I can see your screen. The floor is yours, Ivana.
Perfect. Thank you very much. Well, good morning, good afternoon to everyone. I want to thank Manuel and Sabine for the invite to participate in this event. For me, it's a huge honor. As you can see from the title, the object of my research, and as Manuel has said, has been the role of real estate developers in city production, their collective action, their lobby strategies, and so on. But this presentation will focus on the role of financialization in shaping strategies of large developers in Argentina and their proper mediations to understand variations in Latin America, and especially in Argentina, as I said. In that regard, one must say that developers have been the object of study in the global south, at least since the 70s. But a current debate has recently called for a more nuanced view of the developers. Authors have proposed that by looking at the real work of the developer and their agency, one should be careful about the role of finance and financialization in this process. For some authors and for several authors, financial actors are not necessarily present in funding projects, and sometimes they are not even the instigator of those projects. So on the same line, Julie Polliard has recently published an article arguing that financialization and privatizations for her are not the right lenses to look at the housing segment or the housing sector in France. For her, changing policy dynamic happening in France these days, it's a better way of framing the developers' empowerment and their strategies. So for her, officials at the local government have some sort of relative autonomy from the private sector. So in her opinion, financialization is not the right lenses to look at this process. But although I'm particularly sympathetic to these nuanced views of the developer, I am left wondering about how to explain more general trends, such as the global empowerment of developers that we see happening, and especially happening in the global south. And also the fact that in many large developments, we see the presence of transcalar international agents participating. So to me, there are, of course, global processes shaping these real estate projects all over the world. We've been explaining these with concepts like neoliberalism, financialization, austerity, or the reinforcing effect of all of them, as Felix Addison and Ludovic Aalbers have recently stated in a paper. So as Manuel has argued, and I follow him on this, real estate and finance are not only growing, but also increasingly connected. Not only because real estate is a capital-intensive activity, but also because real estate organizations and financial organizations are more integrated. So even if they are not visible or present at the agency level, their structural power, as Bourdieu would put it, is there. So to me, financial capitalism as a global phenomenon shapes who, where, and how capital is centralized and distributed. Therefore, financialization shapes how state, despite variegations, deal with some of the structural conditions of the real estate, such as a fixed built environment, high cost, long production process. So financialization as a dominant phenomenon has therefore an impact on real estate production, as I was saying, in general, but also on prices, funding, agents, technologies, etc. But I think, and I'm sure many of the audience agree, we still need better lenses to look at how these global phenomena and local phenomena are connected, especially in the global south, where financial institutions are in many cases very unstable, as is the case of Argentina. So I do still wonder, what are the conceptual mediations that better explain the real estate structure in these countries and the developer strategies in countries such as Argentina, but also can be applied to other cases. As I will argue, at the level of agency, we see all sorts of strategies. We even see that in many countries, development is not necessarily an independent activity or an independent field. But my argument will unfold in three parts. The first part revolves around important mediations to understand the structuration of the real estate sector, which share some common elements with other peripheral economies or with other Latin American countries. So there are global and regional trajectories that are important to understand, including that of financial subordination and its impact on volatility. The second part will be about how this volatility imposes short-term processes and therefore impacts on the possibility of implementing long-term regulations, for which I appeal to the concept or the idea or the term of experiment. Finally, my last argument revolves around the strategies of large developers and how these processes shape the strategies of these developers. So the first point I want to make is that in analyzing variegations of financialization process, Manuel and Rodrigo Fernandez have already explained and used the concept of financial subordination to analyze what's happening in the financial sectors in peripheral economies. This concept has been mobilized, but remains very contested for many authors. Some authors dislike the concept because they fear it reproduces the dichotomistic interpretations of center periphery. Others argue, and I agree, that at the level of agency, we see a lot of interdependencies between the financial center and the economic periphery. But one of the reasons why I use this concept, and we can discuss this later, is that it highlights three elements that I think are important to understand the case of Argentina. First, the centrality of hegemonic currencies. In this case, in the case of Argentina, is the US dollar, and therefore the hierarchy of the financial system. The second element is the vulnerability to international capital influx, and therefore the volatility experienced in peripheral economies. And finally, something that I think is very important to Argentina is how this financial subordination constrains action and reinforces the same process, as many authors in Argentina have analyzed. So when one of my interviews said, and I quote, "The Ministry of Economics is being run these days by the IMF," then it's impossible for me not to talk about hierarchy and subordination. But another thing that is mentioned in Manuel's work, but not necessarily developed as a specific topic, especially not in the case of Latin America, and it's something that I've been looking at, is the need to look at the business structure in Latin America, if we can make this generalization, but we can discuss better later. Professor Beatriz Rufino from the University of Sao Paulo, her colleagues and myself have been insisting on crossing our analysis of real estate sector with the dynamics of the conglomerates and holdings in the region. There is a very long tradition in Latin America of studying business groups, But of course, real estate development has always been left aside because in this Latin American tradition, because it was considered a minor component of the GDP. But the reason why Beatriz and I think it's important and to study groups and these conglomerate family firms is that in Latin America, they play a key role in space production. According to historians of post-colonial business processes in Asia, Africa, and Latin America, large firms are organized into business groups in Latin America, which tend to be small firms for international standards and family-controlled organizations. But the one thing that distinguishes Latin American family conglomerates is that this firm invests in multiple and unrelated fields. They are not necessarily integrated horizontally or vertical, but across multiple sectors, often with few market or technological synergies. These are very dynamic and flexible organizations because of low labor and financial requirements. On the other hand, their managerial control is so centralized that they can buy and sell companies very quickly. These firms work with a well-developed set of multinational corporations that remain in strategic positions in most of the countries in Latin America. But unlike what happened in many countries in Asia, where states were able to steer foreign investments into desired sectors, multinationals are dominant players in Latin America. But these groups are different. They are very flexible in behaving in volatile environments and usually have their core activities in oligopolistic sectors that provide them with a reliable cash flow. Internationalization of these groups is limited, but it exists, and they are capable to mobilize capital from their subsidiaries and from national and international capital markets, but acting themselves as capital markets, as their own capital markets. Therefore, only a few of them are publicly listed, or they list as subsidiary, but in most cases, owners control and maintain control of a pyramidal corporate structure. Sorry. So how does this shape the financial and the real estate sector? I will start with the financial. First, as in the case of Brasilia, Fabio Contella and Daniel Sanfelici were discussing, we have a bank-based economy with high bank concentration, where public banks control most of a large part of the market. As a result of the business groups, the capital market, especially in Argentina, does not play a key role, and it's organized around public securities. So unlike what Daniel was describing a few weeks ago, that capital market was able to centralize capital from retail investors, in Argentina, that's not really the case. Only the capital market is only able to organize securities or to trade securities such as public bonds or very short-term instruments such as credit card securitization and so on. So in addition, and because of what I mentioned about subordinate financialization, Argentina works de facto as a monetary economy with extremely high inflation. And finally, one very key element of how the financial system is structured in Argentina is that the capital flight is very high, as it happens in many Latin American countries, but the characteristic of the capital flight in Argentina it's very important because it's in the hands of retail investors. So all of these business groups have very wealthy families running. Oh, sorry. Sorry. Yeah. So as I was saying, all these business groups have very wealthy families running them with undeclared assets all over the world. But so they are naming scandals such as Panama Papers. But what happens with the real estate sector? Well, the real estate sector acts for these groups and in general as a safe deposit to hedge risk in a volatile environment because it remains a dollarized asset. So it acts as a way of sowing pesos and harvesting US dollars, at least as an expectation of investors, of course. But at the more structural level, we see groups controlling raw materials in Argentina, and we see also very low industrialization in the construction sector, as well as high informality and lack of long-term credit for the real estate. There is a picture here where on the left, we see a small developer building, and on the right, we see a very high tower in Buenos Aires. And with, of course, more industrialized, but still dependent on traditional on-site production. So the level of prefabricated materials and how it is used in Argentina is still very limited. The level of industrialization in the construction sector is limited. So in the real estate development activity, we see two things. In most of Argentina, the division of labor is very low, so development is associated with small firms or small brokers. But in the large cities, of course, development is an hegemonic way of expansion and densification, but remains an activity not highly specialized with very little entry barriers. So with entry barriers in the real estate sector being relatively low, the wealthy elite easily position themselves in real estate, not only as buyers or as an investors, as we could see on the global north and Manuel has analyzed, but as developers themselves without much previous knowledge. When they have strategic information, they simply buy land and develop, and it's easy for them, or sort of easy for them, to find the right agents to instigate development. So what about then, my second argument is that in this context of volatility, high inflation, and capital flight I was talking about, this process takes, the real estate financialization take the form of experiments. So over the past years, after the financial crisis and the commodity boom in Latin America, I have observed what Manuel would call re-regulations over credit and real estate, aiming at organizing long-term financing instruments through the formal financial system, and promoting, of course, construction and development. So I have analyzed 3 cases: housing mortgages, REITs, and what I call land experiments. But what do I mean by experiments? I borrowed the term from Professor Orlando Aalbers from the University Federal of Rio de Janeiro, who uses this term to talk about urban neoliberalism and privatization in Brazil. But he doesn't use it the way I use it, but the way I try to conceptualize it is in this way. First, when I talk about experiments, I mean financial and real estate re-regulation reforms led by an urban financial coalition of agents. This coalition, as I call this, was built along 2 boom periods, the 90s and the early 2000s, promoting reforms that remain active in times of crisis, where construction was to be promoted. These reforms, generally speaking, were in line with providing public support to developers' profits, such as credit, tax cut, subsidies, public land, and or facilitation of urban norms. So to me, these experiments are not other than political attempts to link savings and space productions through the formal financial system. These attempts or experiments end up being, in my view, short-term in their effect because of external and internal problems, tensions and contradictions, such as macroeconomic volatility or internal design. But we are left with losses, as well as unfinished plans and unfinished constructions, some of which are shown in the pictures of this presentation. So the first case I have analyzed is the housing mortgage experiment, or what I call housing mortgage loans experiment. Here in this line, we see the four main big reforms in the past 25 years, but there were others. All of these four types of reforms were the result of a strong participation and consultation to developers and the financial sector. But the last one in particular was in fact the result of an intensive developers lobby. They all aim at targeting the middle class and channeling public and private money through private, public, or mixed banks, but failed to deliver their purpose of offering a financially sustainable system that would somehow capture private resources into the real estate. In all of these programs, in all of these programs, I would argue that what better explained the failures were macroeconomic conditions. But of course, some internal conditions were at the base of their failure: speculation over land, input prices increasing because of the role of the business group I was mentioning, as well as high cost of securitization, and also the strong reluctancy of private banks to lend long-term unless they were forced to. So to me, without a doubt, the volatility of the system I mentioned, the overall dollarization, the private bank's business model, as well as the role of the groups in controlling input prices are at the base of these unstable arrangements. Securitization of long-term instruments prove also to be an issue because of low volume and high cost. The other case I have analyzed is the one of the real estate funds. We see a similar pattern in terms of, first, real estate, financial, and the state highly promoting these instruments. They had a peak in the 90s and another recent one in 2016, 2017, which is completely different from what happened in Brazil, where we see an ever-growing curve. What we see in Argentina are only attempts to open up a market, frustrated once again by external and internal problems. On the external side, macroeconomic conditions such as devaluation, inflation, and the crisis that followed the signature of the IMF agreement were without a doubt part of the causes. On the internal side, these funds were unable to attract either international investors or retail investors, and proved to be inadequate for developers for not being flexible enough to allow for the handling of risk. So only national institutional investors and some groups wanting to profit shortly from tax incentives ended up investing in these instruments. As a result of my research on REITs, REITs show to be an inflexible instrument for a volatile environment such as the one in Argentina, and the timing factor proved to be a key element of real estate investment, a key element or key problem for real estate investments, both in the 90s as well as recently. In that regard, a consultant I interviewed was talking about these financial instruments in the 90s. And he said, and I quote, "I'm a bit ironic and sarcastic, but what happens? How do these types of investors," he's talking about international investors, "disembark? The lawyers come with a consulting team, an investment bank, or their new business development exploration team. They come, they fly in first, so that's $10,000 for each one. They stay at fancy hotel, eat at fancy restaurant, hire services from ladies, smoke cigars, drink cognac, visit everyone and go back. They hire a very expensive law firm, they start a firm. Starting a firm in Argentina is very complex," he said. "Then they look for partners and search for land. So 2 years have passed already, so by the time they started in the late 90s, they had already lost timing. So the timing factor and the fact that these windows of opportunity take a very, very short period of time is very important, and was very important also in the 90s. So the final case I have analyzed is on land experiments. In Argentina, we see two waves of land disposals coming from the national level. One in the 90s linked to the privatization of public companies, and the other one very recent. Unlike the other two cases, these ways or these policies were mostly promoted by the national government, being backed by local governments in the main metropolis of Argentina. But in both cases, there was a very active role of the state in attracting developers and international funds and involving them in the decision-making process. In the 90s, the documents revealed multiple meetings at the highest level with international investors such as Donald Trump. In the recent one, as Francisco D'Alessio has shown in his master's dissertation, public authorities did a sort of, or organized a sort of roadshows with international funds in France, New York, but especially in Latin America. Why? Because they knew investors in the region would take the decision to buy land faster than the ones in the more developed economies. Authorities knew that while they were in government, the aim was to sell as much land possible, and to attract the bigger fish they could find. But the important part is that they knew this process was not going to attract investors per se. They knew, as it would happen maybe in core cities, they knew this required an intensive agenda of meetings, incentives, and public help at the service of fixing capital. That they should manufacture this opportunity for funds and work on opening up the market. But on the part of the developers, authorities received precise instruction from real estate organizations on how to organize the auctions, who to invite. They held multiple individual meetings with developers and representatives and tried to accommodate their demands. But what happened was that, of course, soon after they started selling the land, a new crisis hit. And there were multiple properties that, despite the multiple benefits received by investors, remained unsold at the auction. Some auctions had to be reorganized multiple times, and developers were able to and managed to push for lower prices and receive a lot of payment benefits. But there was simply no market for that many properties in such a critical context, even though the state obviously started lowering the prices. So once again, external and internal contradictions ending up shortening the timing of these two waves. In addition to these contradictions, of course, there was opposition from other parties contesting the very aggressive land disposal program organized by the government. But on the left, in this map on the left, we see the properties that were sold, and in pink, I don't know if you can see them, are the properties that remain unsold after this period. So the interventions to facilitate real estate, to help developers, to provide benefits were enormous and all around the city in the case of Buenos Aires. But although they continued to sell land, the local government continued to sell land after this short period, they had to slow down the path or the rhythm of land disposal because there was no market. So in the absence of long-term funding, credit, or stability, what do developers do? The answer to that in the case of small developers is very simple and has always been like that. They resort to friends and family investors, they make agreements with landowners, they fund development through pre-selling units. Some, very few, have credit loans with banks, generally public banks that offer beneficial conditions, or when they offer beneficial conditions for small companies. So their business model is very simple. So when there is a boom, and taking into account that the barriers, as I said, are very low, the number of developers multiplies. But what about professional and large developers? What funding and other strategies do they pursue in this volatile context? Well, in this case, as I was saying, the picture is very diverse and heterogeneous at the level of agency. Developers deploy all sorts of legal and not so legal strategies that are very dynamic, change over time and space, and change during crisis, and boom, and of course, they are path dependent, and they leave constructions that we see in the city. In this small chart, where the categories are not independent but interrelated, I try to present all the areas in which developers have made adjustment in their strategies in Argentina in the past years. As I said, in a legal and not so legal way to deal with this volatile environment. For example, both specialization and diversification, or some basic horizontal or vertical integration, can be seen in the case of many developers. So to me, as in other cases of the Global South and discussed in the literature, we see how difficult it is to generalize trends from different firms. Every firm has its own path and strategy. But to reduce complexity, I do think there are some peculiarities or some peculiar strategies adopted in Argentina that have been shaped by financialization, by subordinate financialization, and by the business structure that I mentioned. I will talk about just very quickly about two on management and funding. By analyzing multiple firms over time, I see a few things. First, in the case of management, the largest developers have organized themselves, grown into, or been absorbed by business groups. As you can see in this chart, I needed too many categories to classify the 10 largest developers and their main activity. And although construction and finance are the usual activities real estate is integrated with, these groups are very diversified. So for example, in the construction, we see the Macri group, the former president's own family group, which has invested historically in public works and construction. Has also been, but this group has also been involved in automobile, mining, food, and telecommunications, and also got the concession of the privatized National Postal Service. So this group organization also means being part of the wealthiest elite. So 8 of these 12 groups I'm mentioning belong to the top 50 richest families in the country. So the groups are heavily involved in real estate from wherever we look at them. So for example, if we take the perspective of the projects, we see that besides the usual suspects, other diversified groups have been acting as developers. But many of them are not participating at the scale of the 10 largest I mentioned before. But my second point about strategy, and I will finish very soon, is that I will get back to what I was saying about credit. I see that, unlike what happened in Brazil, in the absence of long-term credit, they oriented exclusively to luxurious developments targeted to investors who didn't need bank loans to pay for them. So the developments are very geographically concentrated in the richest areas. Many of these companies were never listed directly, or many were listed only after the financial crisis. And also many of them were delisted from some markets like TGLT in Brazil. Some included international partners at the project or the company level, mostly from the US and Brazil, but there are some rare cases where investments came from Chile and Spain. And in order to fund these high-end developments, a key component was land. So either it was public land, the one that used to make the most exclusive development, or it was land acquired in dubious conditions. We can talk about that also later. But for those who develop residential, their business strategy is very similar to the ones deployed by small developers, but they combine these pre-selling strategies with bank loans, unlisted and some listed real estate funds, intra-group credits, but also the ones who develop commercial real estate, many of them, except the biggest and the largest one, is also using a pre-selling strategy. And finally, the last thing I wanted to say is that Uruguay, it's a big part of this real estate, this large real estate developer strategy. Uruguay, and I won't quote this, Uruguay acts for them as a tax haven, as a bridge to other tax haven, as a location that allowed them to capture the savings of Argentinians located abroad. I was talking about the capital flight, and also capturing this in hard currency, but also as a perceived stable investment location and their own touristic and living destinations, since many of the CEOs of these companies have moved to Uruguay. So for the developers, Uruguay is a key destination to manage the risk they perceive in Argentina. And as Marcelo Perez has shown in his recently PhD thesis for the Uruguayan market, and from a perspective from Uruguay, Argentinian developers and Argentinian investors are without a doubt at the center of the real estate dynamics in most of the cities. So finally, along this presentation, I show you some of the pieces of my own research puzzle. The main purpose was to present a general view of the structuring mechanisms behind developers' funding strategy. In my view, as I said at the beginning, we still need better instruments to examine the mediations between global financialization and local city production and the role of developers. And I strongly believe that the idea of peripheral and subordinate financialization is a vital structuring element with, of course, variegated geographies. But another one that has emerged as a very structural one to me, and I shared these results with Beatriz Rufino, as I said, is the role of business groups in situ production in our Latin American metropolis. As I intended to show in this presentation, this structuring has two main consequences. On the one hand, financial insubordination enforces and reinforces conditions of vulnerability and volatility, creating windows of opportunities for high gain and big losses, but mostly for short-term financialization experiments, as I call them. To me, these were moments where the strong political will to organize the formal financial system found itself full of external and internal tensions and contradictions. On the other hand, this volatility reinforces the need of large developers not only to find alternative sources of funding than the traditional ones seen in other markets, such as capital markets or banks, but also their need to keep some sort of flexibility and financial autonomy to be able to cope with these local conditions. In that sense, one could say that developers have always been financial experts and have internalized alternative financial innovations than those seen in more developed markets. They depend on crucial benefits from the state and from other economic groups, for which person-to-person relationship might have a more important role than in other markets. And to finish this presentation, I would like to go back to what I think was one of my main inspirations in Christian Topalov's work on developers. For him, it was not so much about what developers were doing back then in France. They always think they are the orchestra conductor. It is more about how money is being centralized, where and by whom. So because, or in spite of their agency and the relative state autonomy, how, where, and by whom money is centralized remains an important topic of research. Business groups might provide an interesting site to look for answers, because these organizations are probably more flexible and liquid in design. And with that, I thank you very much for your time, and sorry if I took too much. Sorry, Manuel.
That's okay, Ivana. It's just a few minutes over, and we always start a few minutes late anyway. It's great. We still have 20 minutes for Q&A. So thanks a lot for your presentation. There's a lot in there. I'm sure there's people still processing what's going on before they can actually ask a question. So if anyone has a question, if you haven't seen it in the chat yet, please type a Q or a question mark in the chat, and then I'll give the floor to people in that order. In the meantime, please note also that Sabine has posted a link to the YouTube channel of FinGeo in the chat. And you can not only check out previous lectures there, you can also subscribe to the FinGeo channel there. So if you want to stay up to date or want to see this in your feed, I'm not sure exactly how that goes because I'm not registered for YouTube, but I'm sure you will get some sort of updates, because it's perfectly fine to watch it otherwise as well. I see Sabine looking suspicious that I'm not even registered. But so anyone who has a question? Yes, Simone, go ahead.
Hi, Ivana. Hi, Manuel. Hi, everyone. Thanks, Ivana. I know it seems like I'm stalking you because I'm currently in Buenos Aires for the Aalbers and trying to do some research on these topics. And I've mailed Ivana recently. But yeah, your studies are really fascinating, and this context is extremely fascinating. I have a question which links to, I mean, you're looking especially at this field purely from the perspective of how capital accumulated elsewhere then is translated to the real estate as mostly a place for accumulation, for like as a safe deposit, in the sense that it seems, and this is somehow confirmed by the growing number of empty housing in this developments, there is not really an expectation to create other profits from real estate and housing itself. In many cases, they're not even interested in renting, etc. So my question would be, how do you conceptualize this relation between in housing financialization, between the use of housing as asset, as a deposit, and the other dimension, which is financialization as a way to extract further profits from reproduction, from the need for the shelter? Is here a case in which there is a stronger separation between these two fields? Even, the real estate investment trust you've been studying, which are usually used to extract from the rental markets, and you describe they tend to fail. So is here like completely disconnected housing as a shelter from housing as investment in Argentina? Is this the ultimate conclusion, maybe? Thanks.
Should I answer that now?
Yeah, you can answer it now.
Well, it's an important question, but I definitely don't think they are unrelated. They imply the same agents, and both. One of the things I've seen is that many of these groups started accumulating in the real estate sector, or a large part. For example, Consultatio, the owner of North Delta, the large part of his wealth comes from his real estate development. So the process of accumulation is very much interlinked with the process of using land as a safe deposit over time. But I'm not completely sure I understand your question, but I do think that what happens in the commercial sector, or like that I studied a lot, the offices and shopping malls, is that the very centralized, it's only two groups who run most of the shopping malls in Argentina, a large part of the shopping malls, and only very few companies, 3 or 4, that have the main offices. So they not only they profit from the real estate per se, but they profit from their very dominant position, because they are it's like a sort of very oligopolistic or monopolistic activity. So they are able to pressure over small retail, from shops, from extracting high rents in the case of shopping malls. But in the case of offices, the business model is completely different, and the margins are lower in Argentina from other markets in the region, I would say, or are similar. It's like for them, as they have told me it's just like a business like any business. So the real business for them is mostly residential and large luxurious complex where they get more of their profits from. And in that sense, they use these strategies that I mentioned. But yeah, probably not sure if I completely understood your question.
You want to respond, Simone?
Yeah, but no, you partially clarified my doubt in the sense by linking, with other fields of real estate, like shopping mall and office space, etc. But my question was linked to the fact that what people have been saying here is that these luxury development are created by basically they're not being used, in the sense that the extent of the use of empty housing is so large that it seems to be more than just using part of the stock as a safe investment, because it seems not to be backed by, anyway, people are actually buying it. Who is buying them? These units? Apparently no one. What I've been told, that these developers, they build these towers and they stay there. They're not interested in selling it because nobody's getting access to credit to buy them, etc. So it seems there is not that there is not elsewhere a disconnection between the use of real estate as pure investment and its use for its use value. But here it seems there is a wider distinction.
Okay.
Maybe I'm influenced by the fact that I look especially at housing, where it seems to be wider, while in other fields it may be different.
I think now I see your point. I would say that one of the main explanations of the large vacancy of housing real estate in Argentina in general is that the taxes are so extremely low and the cost of maintenance tends to be manageable. And if you compare the evolution of prices with these low taxes and these low costs of maintaining these properties, there is, of course, these properties still are able to conserve value over time, or at least they are still marketized as being able to conserve value. And they have been, if you look at the historical series, they have been able to conserve value in hard currency compared to other or to the stock market, to other alternative investments. So that's the reason why people keep investing in housing real estate development, even if they remain empty, and they still consider it a good business. And I think many of the numbers show that it is a very good investment still, even though after the pandemic prices have gone down. So I would say that the long-term trend is that it remains as a safe deposit, and it sort of fulfills that role and that objective, even if they remain empty. And again, compared to alternative investments in Argentina for this type of investors, which is of course different than the large, very sophisticated international funds expectation.
Thank you for the question and also the answer. Then there's the next question by Mayra.
Hi, Ivana. Thank you very much. So my question is, at the end of your presentation, you tell that all of these experiments were short-term, are aiming for short-term relations and endings. So my question is, do you consider that those failures about all these types of experiments are more due to the strategies of the investors itself? So are they aiming to short-term strategies, or they are only short-term because of the macroeconomic scenario that do not allow them to pursue this strategy for a long time? I mean, as you showed in your timeline, these strategies took like 4 or 5 years, as I can be wrong,
or less, yeah,
or even less. So my question is this failure of the experiments due to the strategies of the investors itself, or it's only because of the macroeconomic instability of Argentina that we know it's very high, and this is have a considerable.
I would say it's a mix of two. First of all, these policies, as I call them, experiments and short term, end up failing because of the contradictions, as I said, tensions, external and internal by design. But some of these offer very short-term windows of opportunity for example, groups that profit from tax incentives to put money into the capital market, or to what I call whitening money from the informal financial sector and taking it to the formal financial sector. So in that sense, the experiments per se are not aimed to be short term. They end up failing. That's the first point. But the second point is that for some of these investors, at least for a very short period of time, for those who invest properly and have the knowledge, they end up being very profitable and short-term successes or losses. There are a lot of groups who lost a lot of money in these real estate funds. There are a lot of groups. There is one private bank who lost money in the index housing mortgage loans. So there are losses, but my idea is that these experiments piled up over time. So when there is another timing context, moment of boom, etc., these instruments are there. So they are short-term in the sense they quickly fail, but they remain enforced in the legislation, so therefore could be used in the future for a different purpose, for a different agent, for a different for a different moment. So I would say that the idea is that real estate financialization in Argentina advances, jumping from experiments through to experiments.
I have a little follow-up question to that about the experiments. Is there a moment where they cease to be experiments? Is there a moment where the experiment becomes something else? Or is it really like a little bit here, a little bit there, as you said, like it follows from one experiment to the next? And how would you define more conceptually when an experiment is no longer an experiment?
Well, it's a different question. I would say that in the case of the real estate funds, they were, to me, they were short-term experiments in the sense that some regulations were enforced for a period of time, didn't work, changed the regulation, didn't work, changed the regulation, worked for 2 years, stopped working because of the crisis, was retaken by other agents 7, 8, 9 years ago. Regulations was renewed by them. So these funds, if you take the long history of these funds, were sort of the results of very short-term experiments, but the fund transformation, it took 2 decades or 25 years, sorry. So they ceased to be experiments in the sense that they grew as instruments or were more adapted, but got into other and new different contradictions and tensions and problems. So I think the market goes and adapts itself, and I wouldn't say they stop being an experiments in the sense that they are always crossed by these. What I see, there are some tensions in the working of the financial system here in Argentina and the construction and the real estate. So there are some structural tensions, but they evolve. That would be the idea. So they cease in the sense that, they are still experimenting, I would say.
Okay,
new
then
way.
Okay, thanks, Ivana. Then we have another question by Darek. And I hear from Sabine, Dörry, my co-organizer, that she had more or less the same question in mind. So there's at least two people who want to know that question. Darek, could you ask it personally?
So thank you, and thank you, Ivana. So yeah, I was wondering if you could say more about more things we cannot quote about Uruguay. So what these companies do exactly in Uruguay, and you mentioned tax, but is it also about regulation and secrecy? And do you know who arranges that? Is it international tax advisory law firms with activities in both Argentina and Uruguay, or local companies in Uruguay involved?
Well, according to my own research and the one of Marcelo Perez, who is based in Uruguay, it's very different, depends on the company, the way they arrange and the function Uruguay fulfills in their own strategy. For one of the companies I deeply analyzed, Uruguay was a tax haven, and it was a way of channeling money to other tax havens. So it was like a sort of only functioning as a bridge, and it was advised by international investors and by because this company was heavily invested at the beginning by Soros, but then by other American investors whose ownership was hidden in I think it was Detroit, I don't remember, Isle of Man, etc. So in that sense, for them, Uruguay was really a way of channeling and not so much an investment destination per se. For other companies, and this is very, developers invest heavily, and as I said, they have moved to Uruguay, they lived in Uruguay, and they are advised by local companies in their way of structuring their association organization. So they're structuring their organization in order, as I said, to attract money from Argentinians living in Uruguay, attracting money from international investors, but also from local buyers. So it really depends on the firm and their orientation. Some of them develop hotels and are linked to international brands. Some of them just are selling touristic gated communities in housing gated communities in Uruguay. But I would say that Uruguay, I mean, for the IRSA, the company I mentioned, you could see clearly international consultants managing this structure for tax avoidance purposes.
Thanks a lot for that question. Thanks a lot, Ivana, for your lecture and for answering all these questions. It's almost at the hour now, so we're going to finish this meeting. So with an applause from me, I don't know if anyone else has their microphone ready, but I see some people on the camera clapping as well. So thanks a lot. We'll be back, as I said, not in exactly 2 weeks with another lecture, but in 15 days with Thomas Siegler, who will not just ask, but hopefully also answer the question, what explains the global financial network of cities? So I'm looking forward to that as well, and I hope to see many of you again then. Thanks again, Ivana, and bye, everyone.
Thanks again. Bye. Bye, everyone.